What's up, everybody? Welcome back. So today we are talking about a couple of things: leap options, selling covered calls, and essentially just ideas that can make you at least $2,000 a month in selling options. And this is one of the things I'm really passionate about, especially in any kind of market environment like the one we're facing today, where market has just been crashing. Okay, so I'm gonna get straight into this, and so without further ado. The topics that we're going to cover today is essentially what are leap options. So just it's really a refresher for those of you who have traded options for some time. For those who are new, this will be a very good learning experience. Number two is selling covered calls. Again, same thing. But the idea is we're essentially making income on stocks without having to pay so much for 100 shares. Okay, and I'll explain a little more about that in detail later. And lastly, I want to talk about specific option ideas on specific stocks that I'm actually doing myself. So full disclosure, these are actually positions that I have myself and the reason why I'm recommending them. Okay, so this is not any kind of financial advice. Make sure to invest wisely and do your own research. So the first stock ticker is just MPW. And I'm going to try and explain to you the three things I talked about as we go. Okay, so the first stock ticker, MPW, Medical Properties Trust, is essentially an REIT, so real estate investment trust. REITs essentially invest in real estate. Okay, so and specifically this one invests in hospitals. Okay, so a lot of their tenants, a lot of their clients are essentially hospitals, and in my opinion, I don't think hospitals are going anywhere soon, especially the ones that they're invested in. They're very, very profitable. There was one client that filed for Chapter 11. You can take a look at this article right here, and I'll tell you more. But this REIT, guys, is invested into hospitals that are still very, very profitable, and I do really believe that this stock will eventually go up. And so let me show you what a leap option is. Okay, so I'm going to go into my Robinhood account, and a leap option is essentially where you're buying a call option that's expiring a year or more out. Okay, so this gives you a lot more time decay. So typically when you buy call options, if you're buying short term, it's very risky because essentially if the stock doesn't go up by a certain time, you're going to potentially lose your entire investment. Okay, so that's the biggest risk with call options, is that you have definitely the risk of losing your entire investment. Whereas if you own shares of stocks, okay, you can just hold on to them forever. But the nice thing and the advantage of buying leap options or call options is a lot cheaper than buying 100 shares of a stock. Okay, so I'm going to show you how that works. So first, I'm going to set my expiration date all the way out, a year or more out. So in this case, it will be January 19th, 2024. So I'm essentially betting that in a year or more, it's going to be up from where it is today. And on Robinhood, the reason why I like Robinhood is because it shows you how much the stock would need to rise for you to break even. In this case, it would need to rise about 16%, assuming if you choose a call option of $10. Okay, so that means between now and January 19th, 2024, if the stock moves up 16%, we broke even. Anything above that, you're starting to make money. But, okay, so here's the big kicker. Between now and then, I don't have to just wait until the stock goes up. Okay, so I can sell covered calls, which is what I'm going to talk about next. But I'm going to show you what this looks like on the leap option. I'm essentially paying $230 to buy this leap option. Okay, so, and what's great about this is if you were to buy 100 shares right now of MPW, you would essentially pay about $1,000. Whereas if you're buying a call option, you're paying about a fifth. Okay, so a fraction of what it would cost to buy 100 shares. And again, keep in mind, one call option is an equivalent of 100 shares of this stock. The second thing, right, that I was going to talk about was selling covered calls. So once you own a leap option or a call option that expires a year or more out, you have the same power as you would if you were to own 100 shares of MPW. Okay, so what that means is a lot of the times when you have 100 shares, the beauty about it is you can sell covered calls. And let me show you what that looks like. Okay, so once you have a call option or the equivalent of 100 shares, what we can do every 2 weeks, every month, depending on how the stock trades, is you can sell call options. Okay, so what this means is that if the stock rises to a certain price, okay, so you would have to sell your contract. Okay, so and the only thing that you would need to make sure in this case is that you're selling for profit. Okay, but let's just say, okay, I don't think MPW is going to go up to $12, right, between now and November 18th. And what I can do is I can sell a covered call, which just basically means that if MPW goes up to $12, I would have to sell 100 shares at $12, but I would be collecting a premium. Okay, so the premium is 35 cents per share, so that's $35, but I would also collect the profits between the price now, $10.45, and $12. So that's about $150, $185 total in profit if I get called away my MPW contract. Okay, so if you keep in mind, the contract originally costed $200 something, so I would be experiencing a loss. But essentially, if you don't get called away on the first go, then on the second time, you're going to be essentially probably landing a profit by then. Okay, second or third time. And that's just one of the risks of, selling covered calls on leap options so quickly, is that sometimes there's always a chance where you could get called away, but there's also ways where you can kind of go around that. So let's say if the stock pops up, you can always close your short position. You can close essentially your call option that you sold, and you would still own 100 shares or the leap option that you bought. Okay, so I know that may sound a little confusing, but essentially what you have to know is that whenever you sell a call option, you can still close it. So let's say the stock shoots up to like $14, right? At that point, I can simply close or roll the call option so that I won't get called away my leap option. It just depends on what the situation is, and every time the situation is always going to be different. One more thing to keep in mind, guys, is if you don't really want to potentially losing your call option so soon because you think the market will rally a lot in these next 2 months, you can also simply buy 100 shares, right? There's nothing stopping you from buying 100 shares. Or on the flip side, there's nothing stopping you from not selling covered calls. So let's say you're just really bullish on these companies and you don't think that they're going to move sideways. You think they're going to pop up a lot. You can simply forego selling covered calls. And if the stock pops up, then you're going to be making a lot of money. So what I would definitely recommend is doing some kind of hybrid. Okay, essentially either buying leap options or selling covered calls on actually owning 100 shares. Okay, that's honestly what I'm doing myself. A lot of these stocks, I'm actually buying 100 shares because I don't want to get called away my leap option in case there's a huge rally coming in November and December. Okay, so let's talk about other stocks I'm really bullish on. MPW is the first one. The other one is Fubo. Okay, so Fubo is a sports streaming company I've talked about a lot in some of my other videos. As you can see, I'm down some right now, but if I were to buy a call option, guys, I do think Fubo is going to turn around very, very quickly, especially with football season coming up, and they're phenomenal in growth. Their subscriber base has continued to grow. They're paying about $70 a month. This is a solid company. I really don't think it's going to continue trading at that low of valuations, even though it's not profitable. But anyways, check out some of my other videos if you want to learn more about Fubo. Right now, guys, if I bought a call option for Fubo, I can set my expiration date to January 19th, 2024, and I can essentially buy call options for about $230. Okay, so that means the stock would have to go up about 19% before I start to make a profit. And on the flip side, I can also sell covered calls either through a leap option or owning 100 shares. Okay, so this one I would definitely consider doing both. Okay, so I would definitely consider buying a leap option or several leap options, and I would have actual shares because if this stock really pops, you don't want to lose your leap option, right? You want to lose your shares that you bought, and it's just, guys, the stock's trading at $3.48, so honestly, it's not that big of a difference. It's about $348 own 100 shares, and if you take a look at some of the call options you can sell, it's very, very nice premiums. If you're selling 2 or 3 weeks out, you can make $30, $40 on call options that you're selling upwards. And so this is just another stock that is very, very good for selling covered calls or buying leap options. Okay, third stock ticker is AMD. Okay, so AMD, guys, is a solid company, very, very strong leadership. The whole semiconductor industry has really fallen so much this past year. So it's not just AMD, it's NVIDIA, even Texas Instruments. Every semiconductor company, Qualcomm, has continued to go down quite a bit just because of the macroeconomics of what's going on out there. But take a look at some of the prices for buying call options, right? If you believe AMD can rise in a year or more, you can definitely get a really good price right now on Leap options. And so let's just take a look, right? So I can buy a Leap option right now for about $2,000 and at a strike price of $45. So that means if the stock essentially, let's go ahead and click on it. If the stock moves up, 16% between now and January 19th, 2024, we're going to be making a nice profit. Okay. And this is much, much better than buying 100 shares at about $6,000. So you're essentially paying about a third of what you would pay to own 100 shares. Now, what I'm personally doing myself is that I bought 100 shares of AMD because I don't want to risk getting my AMD contract called away. Okay, so I don't mind having shares called away because I don't have to pay for the premium on the call option. But it's really, really up to you. Okay, so but let me just show you what the call options look like on a bi-weekly basis. So right now, you can earn about like between $200 and $300 on the upside. If you want to go a little safer, about $200. And so this, AMD is paying very nice premiums on the upside. If you add up all these different call options, so, AMD, Fubo, medical properties, especially if you open up multiple contracts, guys, you can easily land over $2,000 a month, like very, very easily, right? Okay, so that's AMD. Let's talk about two more companies, and these companies are definitely companies that you've probably heard of. And the first stock ticker is Google. Okay, so stock ticker GOOG. So this is actually another position I'm in myself. Okay, so I bought 100 shares because, again, these companies, I really don't want my shares to be called away. I'm definitely in them for the long term. I really think, these companies will eventually recover. Google is down 30%, Meta's down even more, 60% plus. And these are all really solid companies, right? They have so much in the pipeline that's going to change the world. And even though people are hating on the metaverse right now, guys, Mark Zuckerberg is a smart guy. Like there's very, very few competitors I know that is doing what Meta is doing, right? They're essentially taking products that work well for other companies and they're making it better. They're curating the algorithm so that people will continue to watch their social media stuff. And they're doing a very, very good job retaining not only customers, but essentially advertising for businesses. Okay, so, but first I'm going to talk about Google. So Google right now, if you buy a call option out to January 19th, 2024, you can buy a call option or a Leap option at about $2,000. Okay, so again, this is a phenomenal deal for Google, especially with Google down about 30%. You're paying $2,000 instead of $10,000. That's a steal. You're essentially betting that Google will eventually recover. And if it does recover, then you'll be making money. If you have the money, I definitely would recommend just owning shares as well, because then you can flip it around and sell covered calls. Okay, so you can sell covered calls with less stress because you would know that, even if your shares get called away now, you're still making a profit, right? And I'll show you what the premiums are. So just 2 weeks out, you can make about $200. If you do this, just twice a month, right? Twice a month, that's $400. Again, if you combine some of these stocks with the other stocks I'm talking about, you can definitely make $2,000 plus. Okay, so that's Google. One more I want to talk about today is just Meta. Okay, so like I said, Zuckerberg has been slammed because of the metaverse. There's just so much uncertainty with how they're using their cash, and a lot of people are wondering, what is this metaverse going to be? But that I think that uncertainty is just uncalled for, right? Essentially, Meta still has so much products in the pipeline that's making them a lot of money. They have a strong balance sheet. But let's just take a look at some of the Leap options for Meta, right? If I buy a Leap option now, expiring January 19th, 2024, I would be essentially paying, again, about $3,000. Okay, $3,000 $3,500 for a leap option at a strike price of 120. So that is very, very, a steal in my opinion. Instead of paying, 13,000, you're paying, 3,500 or 3,700, right? And that's what, a fourth of what you would pay for 100 shares, and you can own essentially the same power as 100 shares of Meta. If Meta goes up to 200s, even like mid 200s, you're going to be making a nice, very, very nice profit. Okay, if you own 100 shares, okay, which is what I'm personally doing myself, you can sell covered calls. Okay, so covered calls right now is pretty nice premiums as well. In fact, it's very, very nice. You're making about $700 on the upside. So if the stock pops up, you may be called away the shares, but you're already collecting $700 on the outset. Okay, so guys, in my opinion, it's just very good premiums right now because there's so much volatility around Meta. And so this is a stock that I definitely don't mind trading because I know it's a good company for long term. And again, if you're bullish on Meta, if you believe in Zuck, then you can make great money no matter what. If the stock goes down, you're essentially hedging your position with the call option that you sold against it. Okay, so that means if the stock goes down, you would still make some money from the call option that you sold, because you hedge your position. And what I personally would do is I would do that, but also if it goes down even more, I'm just buying up more, right? I really believe this company is a good one for the long term. And so yeah, I think that pretty much covers all that I wanted to talk about today. Make sure to like and subscribe. I had a beautiful cloudy photo of this like and subscribe button. It just really encourages me to continue making these videos. And if you have any questions, let me know. Comment below. Let me know if you would trade or if you would buy leap options and sell covered calls on any of these stocks, or if you have any ideas, I would love to hear them below as well. Thanks guys for watching, and we'll see you around in the next video.